Well, here's a stock that if you've owned since 1st January 2022, you've made 6.5x your money. In fact, in the last 6 months, it's doubled, and in the last 12 months, it's gone up by 5 times. It's IRFC, and we'll try to break this one down. First off, why has it gone up so much? Well, FY21 onwards, the Indian Railways has really invested with regard to capex in railways, and this one assists in funding of that capex, and therefore it's gone up substantially because the growth has gone up quite substantially. In fact, since FY21, the top line CAGR for the company has been 20% plus, in fact. And even in terms of bottom line, it's gone up just about 12%. That's also because the interest rate environment has changed, but outside of that, we've seen strong bottom line growth except for FY24, so outside of FY24. In terms of book value, the book value CAGR has been 12% roughly on a year-on-year CAGR basis since FY21, but the last 10 years it's compounded at 20% book value CAGR over the last 10-year tenure, and that's probably why the stock has also risen up. In terms of valuations, currently it trades at 3.8 times price to book, which is way more expensive than most private sector banks as well as most NBFCs. So this one really trading at a slightly elevated valuation. I'm obviously talking about the FY24 price to book, and in terms of its own average, it has roughly traded below the one-time price to book because it's a PSU, 86% owned by the government. So who is really ramping up ownership? Firstly, the free float is very low, and that's likely why the stock has risen up very, very quickly. DIs are the ones who have exited. So from 3.5+% owned by DIs, now DIs own less than 1% in the company. In fact, public shareholding has gone up substantially from 9% to over 11%. So be careful because relatively the valuations seem to have gone up quite dramatically.